Hi everybody, this is Lara at pureelliottwave.com with an update for Cardano for you. And a reminder, just for the next 2.5 days, my online course Learn Pure Elliott Wave is still on sale at 40% off. If you want to purchase that or just have a look at it, I'll put a link in the description box of this video below. You can click through to my website and have a look. Okay, let's get into it. I did just record a video of updating my analysis for Cardano, and a technical error, no volume was recorded. Yay, so I get to do it again. So this is going to be pretty quick because I've already done the work. Okay, so I had a main wave count and this was an alternate, and now it's the main wave count. The main wave count wasn't invalidated, but it doesn't have a good look in terms of proportion. So my alternate was expecting more downward movement for primary wave 2 to end in this range, 0.75 to 0.327. It's possibly ended at 0.406529 in that admittedly rather wide range. And it is, let me just quickly calculate the depth of primary wave 2 to 1. It is an 87% correction of primary wave 1. A normal range for cryptocurrencies is from the 80 to 90% range. That's absolutely in that it's normal to be expected range for a big second wave, and so it is entirely possible it would be following very normal behavior if it was to be over here. So at the daily chart level, I was concerned, could I see an impulse for A, and could C be complete? So let's have a look and see what happened there. I'm just going to squish up A so you can see what I did. I had a check for the middle of it. Yes, the middle of it subdivides as an impulse. The proportion isn't great. Subnuet 2 is much longer than minute 2 and minor wave 2, but that's okay. Sometimes lower degree corrections can be longer lasting than higher degree corrections. The only way you could avoid that in Elliott wave terms would be to see minor 2 beginning here and ending here, and then it would be a running flat, and that's a very, very, very rare structure and should only be considered in the appropriate context of a very, very strong trend. And although this is a decent trend, it's not a very, very strong trend. Here's a very, very strong trend, and here a very, very strong trend. It has to be extreme. This is not extreme enough to consider a running flat here. So I have no problem with this. A lot of people will have a problem with this. That's why I'm covering that. Okay, no problem with these fourth wave corrections. There's no overlaps between 4 and 1, and all of the subdivisions fit. This final fifth wave has a really, really good look. I'm not going to worry about the structure of intermediate B. I was concerned about the structure of intermediate C. Could it be seen as complete? Let's expand this out. And yes, it could. I'm not completely happy with the labelling of this, and so I am absolutely open to the idea of one more final low for Cardano. But when we look at some classic analysis, there is a little bit more weight given to the idea that this could be a sustainable low. Let's jump over and have a look there. Weekly chart first. The last high, there was double bearish divergence between price and RSI. So it's unsurprising we got a bear market, and that double bearish divergence came after RSI reached deeply overbought and ADX reached very extreme for the upward trend. So it's absolutely unsurprising that there was a deep pullback. Now this pullback is in a very normal range of 80 to 90% of the prior upward bull market. So this bear market has fulfilled an absolutely normal depth for cryptocurrencies. There's also a selling climax for this last downward week and a bullish long lower wick. Here's another selling climax for this week here. They're separated by several weeks, so it's okay that there's two selling climaxes here, and the second one has somewhat slightly lighter volume than the first. If we see more than one selling climax with a gap of some time in between them, the more you see, you could see a third, sometimes that happens, but with each subsequent selling climax, and it works in the other direction as well for a blow off top, with each subsequent event, the probability that that is sustainable for the long term increases. And I've just occurred to me, I also need to apologize for the wind sound. I have to have a fan on today. It is so hot here in Mexico, and my accommodation sadly has no air conditioning, so that's the background noise there. I think we're probably we're looking at price bouncing up off support here at 0.4 Previous resistance, not particularly strong though, rather weak. So weak support. On balance, volume gives us no new signal and there's no divergence, either bullish or bearish. RSI is not yet oversold on the weekly chart level at this low. It's really close though. There is no bullish divergence at this low. I would be happier if we could see it, but you don't always see that at lows. At the weekly chart level, ADX is just now indicating a downward trend. It took quite a long time to catch up from the very extreme upward trend to the fact that there has been a downward trend for many weeks now. It's based on a 14-week average, and with these bounces along the way down, it just took a while for ADX to catch up. This is a very bearish signal from ADX, rising up from low levels, coming up from below both DX lines. It's now reached 15, the ADX line is rising, and the negative DX line is above the positive DX line. This is indicating a new downward trend in an early stage. Stochastics oversold, ATR declining as price falls, also normal behaviour for these markets. What about the daily chart level? We're going to look at these last weeks of downward movement, the last 4 months actually, and here's this last really strong downward push, and it's coming with an increase in ATR down to this last low. At the daily chart level, there is an extreme downward trend, not as extreme as it can get. It's not above 45 yet, but it is above both DX lines and approaching 40. So this downward trend at the daily chart is extreme, and RSI did reach oversold, but there is no bullish divergence. So there's an extreme downward trend. RSI has reached oversold, prices bouncing up from support. There's a bullish long lower wick at the daily chart level as well. Now I haven't made a note on this chart, but I should have. This green candlestick here is a bullish engulfing candlestick pattern. It doesn't have support from volume when we compare the volume to the day immediately prior, but volume is heavy compared to all previous days apart from these few here. So volume remains heavy on an upward session. Not as heavy as I would like for really good confidence, but you don't always see that off lows for these markets. So we have an extreme trend with bullish candlestick patterns. We have to give that bullish candlestick pattern a lot of weight in those circumstances. The last signal on balance volume gave was bearish, no new signals and no new range. There's no bullish divergence here between on balance volume and Cardano. We've been over ADX and RSI. Stochastics returning to neutral. You could, I guess, make the case for a little bit of bullish divergence here. It's so weak I'm not really going to note it. And I'm just going to leave the correlation coefficient at the bottom of both of these charts, just jumping back to the weekly chart. This shows you what I'm trying to illustrate a little bit better. And the most controversial and least liked video I've ever done on this channel was a video about simple math. It's amazing how upset people can get over maths. I was showing the correlation coefficient between Bitcoin and a whole host of smaller coins, indicating that they're not always correlated. People assume that Bitcoin and all the other coins are going to be correlated, and they are quite often positively correlated, but the math shows that that positive correlation, which exists a fair amount of the time, cannot be relied upon. When the correlation coefficient moves between +5 and -5, there is no statistically significant correlation. And here the correlation coefficient can move from a positive correlation past 0 into a weak negative, not statistically significant correlation. So it can go from positive to negative. There is no reliable statistically significant correlation between Bitcoin and Cardano. So although there is currently a positive correlation, we cannot rely on that continuing. That's the point I wanted to make with that. Okay, that's it from me with an update of another cryptocurrency for you today. Thank you so much for watching if you got through to the end, and thank you so much for your support.